Welcome to Momentum Monday. Today is April 3rd, 2022. Howard, how is life in Arizona?
Fabulous. I've been home finally for a couple of weeks almost. No, just a week, and I'm heading back on the road for a month. So
are you missing the food already?
I haven't really missed anything, but I'm trying to avoid the markets just in general and do less. How are you doing? I know you've had some skin work done, so you're off the air.
Yeah, I mean, I'm doing well, adapting to the quickly changing market conditions.
Yeah, I mean, you're the best at that. That's why we have a show. I don't know what I'd define. I have one strategy, and I'm just in my old age, I only can follow so many ideas and get excited about growth. So, you know, it's interesting as I've gotten older, Ivan, I don't care about rotation and care about, what do you call it? I care about like,
you have your comfort zone and you don't want to go out of it. So
yeah, I have capital preservation, which I'm in right now, just because such growth is out of favor, but I can't. I'm too old to learn some new tricks or care about companies. You know, as I teach younger people, I'm like trying to explain to people, you don't have to trade everything all the time. You know, this has been a great market for some friends of mine that have had a rough go for 8-10 years, and you got to let them. It's just a different type of market right now. I mean, you've got inflation and rising interest rates that are on the brink of really shooting higher. We're breaking some long-term downtrends. Everybody's trying to figure this out. And I'm like, why don't you just wait to see what really happens here at these key points?
Yeah, the market is cyclical. Commodities, basic materials have been going up for like more than a year, definitely accelerated in the past.
Accelerating, exactly. And the question is this kind of like a blow off top? You know, like I look at Alcoa and I'm like, all right, like I get it, like cyclical stuff. But if you go look at, you know, I'm like, okay, but I mean, it's like GameStop at this point. You know, the market is just doing things that are just beyond my ability to manage that type of risk. And I can't go buy Alcoa knowing how cyclical this is. But at the same time, I understand in a world of meme stocks, in a world of GameStop, why can't this be a meme stock?
Yeah,
like, why
can't?
Yeah.
I mean, they're
so
already
I went short. You know,
all those basic materials.
These were all-time lows to like all-time highs.
Yeah, but almost everything hit all-time lows back during the COVID meltdown.
And I'm talking about true oil commodity. You go from -30 to like almost all-time highs, and you know.
Yeah, absolutely. I mean, definitely some huge moves.
There's some greater powers of force. There's some evil stuff going on, and there's so much money to be made if you're patient and let the ideas come to you. And there's too many people asking me how to still trying to get rich quick, which is fine. It's normal as young people enter the market. But I feel like this market has had to get poor quick.
Get rich quick, yeah. I mean, there are two ways, you know, buy a lottery ticket and pray, or just marry rich. These are the two fastest ways.
Marry rich is still the best.
Yeah.
And that's an open invite to anybody interested in dating my daughter. Whoop! She's got a dowry.
Well, hopefully she's not watching.
Except you, Ivan. I know your history. No way. By the way, she's getting old enough now. Like, or it wouldn't be a crazy. How old are you?
Let's talk about the stock market. Yeah, okay.
So how old are you now? I just can't tell because I can't see you.
I'm old. Too old for her.
Yet?
Too old for her. Almost.
Are you 40?
Yeah, almost there. I'm almost there. So the S&P 500, after relentless rallying in the past 2.5 weeks, and it's very interesting to see last week, it kind of came to its February highs, and then it actually gapped up, broke out above them, just so they can basically squeeze kind of the last remaining shorts that had their stops here, and maybe cause some FOMO, basically like a bull trap in a way. And then it pulled back. I mean, obviously now it's really important how it's going to handle this pullback. It's normal that it's pulling back after this big rally, but as long as it's, you know, makes a higher low, it holds its 200 or rising 20-day or 50-day, there is a chance that it can stabilize, and at least go sideways, if not higher.
Yeah, the S&P looks strong. Listen, it's 500 of the best companies, and there are some great companies that that continue to execute in this through I mean, really, it's like war, famine, interest rates, COVID. I mean, people need these. Here's what we've learned: people need these. It's interesting, Ivan, because I'm thinking through Apple. I'm like, it's now truly my wallet and physical and my digital wallet. I've tried wallets, and I don't care how ugly my phone is, but it's convenient to have everything attached. Especially now that I have Find My Phone. So it's like the rich get richer. If I look at Apple and Google, I'm like, they benefit from everything, right? Until there's a true challenge to the browser and the store and the App Store, everything benefits Apple and Google, and that is a nasty pullback in the NASDAQ, and have Apple and Google. It affected Netflix, it affected Shopify, it affected, overvalued stocks, obviously. And I mean, you got 50% pullbacks in some of the leaders, and Apple and Google right near all-time highs. So it's like, if I was going to take away anything from this, NASDAQ bear market or this growth bear market, it's that you couldn't have told me that Apple and Google could withstand it. But now that they do, you have to think through how and why and what's going on. And like Chris Dixon said, the crypto just makes the internet bigger. NFTs and all this stuff just make the internet bigger. Who benefits the most from the internet being bigger? Apple and Google. Obviously, you'd like to throw in Amazon and Shopify, but e-commerce is still tied to the economy. It's growing, but at some level, it's still tied to the economy. And I think if we look at Netflix, and obviously I got to throw in Microsoft back with Apple and Google. I just don't use their products, so I never mention them. But the one thing I noticed about Netflix this week, and I'm rambling here quickly, Evan, is that like Apple TV, I mean, everybody wants a piece of that attention. And Netflix not doing really anything wrong. It's just in a battle for attention, as we've seen with Facebook, Twitter, TikTok, and now with Netflix, with Hulu, HBO TV, Apple TV, YouTube, doesn't matter how great Netflix executes, there's only 24 hours in a day. So they've got to kind of reinvent themselves here. So that's my take at the highest level.
Yeah, I mean, they can buy a gold mine, I guess.
Absolutely.
Definitely, Netflix is not the same company.
They can do anything they want with that market cap, but they got to do something. And luckily, Reed Hastings has a habit of reinventing himself. So I wouldn't bet against him down at yearly lows, which is why I still own the stock. I think the most interesting thing to me, Ivan, as I was catching up this week finally, is semis rolling over, transportation's rolling over.
Exactly. I mean, this is basically the stagflation trade. In stagflation, you have recession and high inflation at the same time. When you have basically the growth industries, the most cyclical industries, semiconductors, transportation, and retail,
even banks, I think,
and financials.
Silicon Valley Bank has been the strongest, and even that's SVB.
Pulling back, the market is kind of.
I think it's just SVB. That. No, it's SIVB. So even with interest rates gently rising, which is a good market for these, they've stalled. They've had great runs of financials, so there's nothing wrong with any of this. I just have to look at interest rates and inflation and go, one, there is no plan to battle inflation. There's just California, they're just giving away money in the mail for oil, right? Like, just what's California's idea? Let's just give you money. Not really solve the problem. Everybody's kowtowing to just sending money direct to people's wallets. And, I don't have the answer, but I don't think that's the answer. And so in a world where our leadership doesn't have any answers and not even really trying, and the media has done its job in not letting people think, I think you got to be, I think listen, there's great traders out there that can be nimble. But I don't know, in staying 100% invested, how you can diversified, avoid how tough this market is.
I mean, you have to either hedge in a way if you feel like you know how to do it, or you just need to be more active with a portion of your capital.
But it feels like we lost housing. We're losing semis.
Obviously, yes, definitely the weakest year-to-date housing.
So we've lost housing, and I'm fine with that. Like, this makes sense. Interest rates going up. Kids can't afford $500,000.
Anything related to housing as well, like this includes furniture stores. Yeah. And
I wrote about this week. They're the leverage play. At some point, restoration hardware in the hundreds becomes interesting to me, or Home Depot in the low 200s. But because they're well-run, amazing companies. But I mean, look at that. I mean, I'm guilty of a few holds myself that are down 50, 60%. But, you know, I don't know how you own this unless you truly believe we've figured out a way to battle that this inflation is truly battleable. And, you know, with Russia and China kind of just flexing and dealing with their own wounds and self-inflicted wounds in many parts, and it's basically that side of the world is dark to us. I don't see how the supply chain fixes itself.
Look, if Restoration Hardware is worrying about inflation, you know, considering their price tag and them having kind of pricing power because of their brand, what can everyone else say, you know, that actually depends on like the middle class?
Yeah, listen, if you're looking for a growth stock and you believe rates are going to calm down, these stocks will have a lot of leverage in them. But I think just from an overall weight of the market, it feels heavy still, because you're losing banks, you're losing home builders, you're losing the transportations potentially. And so I think it's okay to pay higher prices when things calm down. But then again, on the long-term charts, these are just blips.
Yeah, absolutely. I mean, what at least I saw on Friday, there was some rotation into biotech, which has been the
genetic stocks were rallying a little bit, I saw,
for a while, and it's kind of starting to hold, which means that, you know, money is not really panicking and exiting; it's kind of trying to rotate. So
true, but I got to tell you, I mean, even like, you know, if you avoided owning bonds at 0% and you can get them at 3 or 4, you know, there's a point where bonds become interesting to the wealthy people. If rates continue to go up, there's a point where entering bonds, if you stayed out of them, becomes somewhat interesting for fringe money. But anyways, I think what you said is right, that people still are looking to put on risk. They rotated into biotech, crypto's strong again. People aren't pulling money out. And if people can't afford homes, they may continue to speculate in the market.
I think the big risk in general for the market remains inflation, just higher inflation, because we already know that the Fed and all the other central banks, they know how to battle recession and economic slowdown. You know, they'll just buy, you know, more bonds, more assets. They've done that. That works. We know it works. But they don't have a tool for high inflation. That's the big new element.
They don't. I'm saying, like, my son who lives month to month, you know, because we put him on a budget, just had his budget blown to bits because of oil, because he's got an extra $200 a month in gas costs. And when you're living month to month, $200 on a $2,000 a month budget is, you know, 10%.
Yeah, but if you have a hybrid, much better mileage.
But they can't afford cars. They don't even have credit. So yeah, if your parents buy you stuff, yeah, inflation doesn't matter. But if you're living in the real world where your parents aren't buying you stuff, life is tough.
Look, gasoline in Europe has always been much more expensive. Like
here again, no comment on the social aspects of this and the government side. I'm just saying, Americans are used to $2 a gallon, and at $6 a gallon, it's fucking throwing things into haywire.
Yeah, at the same time, it's like $8.50 in Germany and Holland. And, you know, they've
always had to deal with that. America's had fucking subsidized oil forever, and now they don't.
Okay.
So what are you seeing? What are you seeing for strength? I saw a few tech breakouts. Juniper's breaking out. It's an oldie. Are you seeing any breakouts in tech?
In tech specifically, not really, but I'm seeing big breakouts in metals, like especially lithium and other industrial metals.
Lithium looks great.
So this one, AYC, MP, another one.
Newmont Mining, 24-year breakout. I mean, if you open up Twitter,
we'll get to gold stocks. Yeah, LTHM kind of working on the right side of their new base. Lithium, so definitely lithium in general and other metal stocks are strong.
For people who want a ETF, XME is a mineral mining.
Yeah, that's another way to approach it. In general, metal stocks extremely strong for multiple reasons. Even if the war ends tomorrow, you still have that ESG revolution, and it'll take a ton of metals just to basically to happen, to build so many new electric vehicles and a new grid. So there's definitely a huge bullish market the next decade for metals in general. Obviously, oil stocks are kind of holding despite oil pulling back a little bit, which is interesting to me. That they kind of remained above their 20-day moving average, which is a sign of strength.
I mean, it would take a really big oil pullback to hurt energy stocks right here.
And then you mentioned Newmont breaking out. Just in general, gold miners are kind of setting up for a potential breakout. GDX here near 40. So if it breaks out, it can quickly run to 45. So the interesting part here is that silver is not really confirming that move in gold. And typically we like to say that when silver is outperforming gold, that's good for both. Currently, we're not really seeing that. So it's more like geopolitical reason than inflation worries.
I said I can't learn all these things again, and I'm like just looking for growth, and valuations are so high that it could take a while for growth to just to have a catalyst for growth. You definitely need interest rates.
Tesla announced another 3-to-1 split, gapped up 5% on that news.
And if it works, do it, I guess. Like
it kind of works. I mean, as you can see, everyone else is trying to do it. Restoration Hardware did it. They gapped down.
Can you imagine being in a board meeting and Elon Musk brings it up? What are you going to say? No? Like, how does it? It doesn't hurt.
GME did it. It didn't work for them. So obviously, it's not going to work for everyone. And Amazon and Google also did it. What was it? 20-to-1.
But maybe it did work. Maybe that leaked that they were doing a split. I mean, there's no governance anymore.
Yeah, it's possible. Yeah, it's possible.
Yeah, like the stock ran 100 points on the news. I mean, there is no governance. There is nobody keeping secrets, and so you'll have more selling on the news than ever in a world where everybody has news. So yeah, the GameStop might have been like a short-term top on their announcement. Tesla might be a short-term top on their. Listen, you and I know that splits don't really matter. They don't change the cap table. And in a world of fractional ownership, that was the last bastion of why splits shouldn't matter. It's not like Berkshire Hathaway is split. So again, the behavior is more trickery than financial, but that's been going on for a long time.
Yeah, it's all about sentiment, and in the short term, that's what matters. So I mean,
and it's just the people that got growth short, right? And I've talked to a bunch of the hedge funds that have been covering their growth shorts. They're still short Tesla. They just can't help themselves, and that trade has not worked. And they're going to it's the stock that everybody wants to get right on the short side. So I don't know why people try.
Yeah, for whatever reason.
This looks like a better short, but again, like who knows what they got planned for news.
Looking really weak. I guess Tesla is the only winner in the space.
Well, Audi is an incredible, I don't know the ticker, but Audi is.
I think it's owned by Volkswagen, and
Volkswagen. What is Volkswagen?
This one, I think.
Pull that up. It is owned by Volkswagen.
Yeah.
Also a dog.
So,
okay.
Let's see. Yeah, I don't know. Daimler. Let's see. Daimler.
Yeah.
I guess Daimler.
Tesla's the only automobile, and it's not really it's an energy company / product company. But yeah, Tesla's just a battleground that I've never been right about.
It's definitely the tech leader right now. I mean,
95% 95 relative strength.
And
I mean,
everything else above 95 is oil and metal. That's the only.
And by the way, you're catering to the 1%. You know, I'm in Scottsdale riding my bike today, and I would say 4 out of 10 cars in North Scottsdale are Teslas whizzing by
Let's
me.
check a Ferrari for us right here. Let's see race. Yeah, about
So in the one stock that I didn't buy in the dip, Dexcom, that I've been watching in the medical space, that's had a great bounce.
Yeah, it's bouncing.
If you look at and this is diabetes monitoring. I mean, that's been basing for what, 2 years now. I mean, I'd keep an eye on this one. It's on my list as like a new 8 to 80 company in a world of America where everybody's just addicted to sugar, but like the valuation's bananas.
Yeah. I mean, this one is actually AONTH is one of the leaders this year.
Wow.
I don't know details what they're doing, but ever since that gap here, the earnings gap, it's been
medical products for diagnosis of cardio. Yeah. Okay. Beautiful for those that got that one right. Are you? Yeah. I haven't been watching the all-time high list. Shame on me, because it's been dominated by oil and energy, but you got to look.
Yeah.
There's
and metal stuff.
There's some winners out there.
And here there's something different. So that's about it. For this week, it will be really interesting to see if we actually see a bounce. Like, for example, I mean, among tech, NVIDIA is definitely one of the ones that is kind of holding a little bit better, relative strength of 94. So now that it's down 3 days in a row and back to its rising 20-day, for me to be interesting to see if it bounces. Like a bounce would be a sign of strength. If it just breaks below it, I think it's all over for tech for now. So we need to be watching the leaders, how they're acting, like NVIDIA, Google, Apple, Tesla. These are kind of the tech leaders right now.
Yeah, it just feels like no man's land, but it feels like we had some
compared to the other
bottom.
Yeah.
You've got to be careful the ones taking out the lows, but it feels like we had some sort of bottom a couple weeks, 2-3 weeks ago in a lot of the cloud names.
Yeah, absolutely. Cloud is definitely kind of holding a little bit better for now. Obviously,
but you got to keep an eye on it, because if we take out the lows, there's just a whole nother leg down. The valuations are still
I think in mid-April there is like a new CPI report, and the market might try and front run this. If we see weakness in cloud noise, maybe that's the market front running that, expecting like really high CPI readings. And I don't know how much tax deadline is going to impact the markets. So
I got a big check to write. But that's all good. All right, feel better, heal. And
thank you.
We'll talk next week.
Yeah. All right, Howard. Bye.